Property evaluation for buy and hold investors. I have a property sitting in front of me. I'm looking at it. Do I want to buy it as a rental property? How do I know? So, what are the things that I'm looking at when I'm looking at this property on my desk? I'm going to give you 4 easy things to start with to at least get that ball rolling so you can do a proper property evaluation. That is very difficult to say quickly. All right, let's dive right in. Number 1, what are the numbers? Period. If the numbers don't pencil out, there's no point in even bothering learning anything else about the property. You want to make sure that this property can be profitable. If you don't know how to run the numbers on a rental property, I'm going to link to a video below that is literally my hand on a whiteboard going through it. It's super easy, super straightforward, nothing to stress about. Go check out that video to learn how to run those numbers. Then, I'm also going to link to a video that talks about finding the profit, because maybe it's not just those cash flow numbers. You want to know how a property is going to actually profit, which is numbers, right? So I'm also going to link to that one. Number 2, what neighborhood is this property located in? Is it a good neighborhood? It is a sketchy neighborhood? The reason this matters is twofold. Number 1, for risk, which we're going to get to, and number 2, for the overall profitability of a property. Because the better the neighborhood, the more the growth, the more profit potential there is. If you don't know already, there are actually 5 ways that a rental property makes money, and a lot of those ways are tied into things like the neighborhood. You want to get properties in a decent neighborhood. Doesn't mean they won't be profitable if it's not a decent neighborhood, but in those cases, you need to really know what you're doing so you can know how that's actually going to work and how you're going to make it work. So, check out the video below called The 5 Profit Centers of a Rental Property, and when you hear the explanation of all the ways that a property makes money, it'll probably make more sense why the neighborhood is so key. But long story short, the quality of the neighborhood matters if you want to actually sustain the numbers that you're projecting on it. Number 3, rentability. I feel like not a lot of people use this word. I don't even know if I've heard other people use it on a regular basis, and quite frankly, it needs to be one of the most popular words in your vocabulary. It doesn't matter what the numbers are on a property, it doesn't matter how nice a condition the property is, if it's not got a high rentability factor, meaning people don't want to rent it for who knows what reason, that means you're not going to get renters very easily, and lots of things can happen, kind of in a snowball effect. Maybe you end up having to lower the rent, which will mess with your numbers. Maybe you end up with a really small tenant pool, and so you kind of have to settle for less than desirable tenants. Maybe you have extended vacancies. I've been through that myself because of rentability. You want to make sure that the property you're looking at is desired from a renter's perspective. Shocker, I have a video. What is rentability? Go check that out down below so you can understand more about what this word means and why you need to have it as like a number 1 word in your vocabulary as a buy and hold investor. Number 4, the big one, risk factors. I kind of alluded to this with the neighborhood. If the neighborhood the property's in is bad, if the tenants are sketchy and they're not going to pay or whatever, or the property's in bad condition, think of all the things that can cost you money, because if you have a whole boatload of risk factors going on a property, you may never see that cash flow that you projected before. You ran all those numbers look great. That's just on paper. You want to make sure those numbers are actually going to happen, meaning you can't have a whole lot of risk factors. And if you do have risk factors, it can work, but you need to know how to mitigate them. So remember, it's all about sustaining those numbers that you have previously put on paper. You want to be able to identify the specific risk factors about an individual property. Now, short and brief, right? Super easy. And I'm going to leave you with one more video to help you. It's the pre-investment checklist. So it's kind of like this is kind of a pre-investment checklist, but I go into more detail about each of these things. What specifically am I looking for with each one? What does it matter? Etc., etc. Done. This is all you needed. If this was helpful, hit that like button. Make sure you're subscribed to my channel. I put a new video out every week. And make sure that you have gone through each of these things with any property that you're looking at. This is part of your due diligence. Due diligence is your absolute best friend as an investor. Make sure you know how to do it. And if you don't know how to do any of these things, don't make a move on a property until you learn it. The good news is It's not hard to learn. You just got to learn it. All right? So, successful investing for all.